your mortgage payment interest rate has gone up. Even though the Feds announced on last week that they were not going to be raising rates in the U.S., even though inflation numbers were a little bit higher, they felt that the rates that they had implemented throughout the year will still take time to kind of seep into the marketplace and cool down the real estate market and cool down inflation. So they made a decision not to raise rates, which is a good sign for in Canada, October 25th, when we're meeting again, the Bank of Canada. They will probably most likely be announcing no rate hikes. But regardless of that, on Friday, we received some news from the bond market, which is not the best news that we needed. The bond yields have skyrocketed. So bond yields affect long-term mortgage rates. So believe it or not, our mortgage rates have gone up. So every mortgage rate across the banks today or tomorrow will raise probably by about 0.2 or 0.25. Now, what happens in the bond market is that investors, when they feel the government's not behaving responsibly, a lot of people run to bonds for security. They run to the U.S. bonds because they're the ones who pay their debts. U.S. is more guaranteed to pay off their loans than anybody else in the world, so people run to them. And when people are going to the bond market, they're not happy with the government's doing. What a big bondholder, a big company can do is sell all of their bonds on the open market, and that would make interest rates in the bond yields skyrocket because they have to entice people to come back to purchase those bonds. It will give you a better rate of return, so it entices people to come back. Now, when that does happen, when the bond yields go up, it forces mortgage rates higher. So the banks and the Feds do have to be responsible, and they do have to answer to the bond market because that sector of the market is a lot more powerful than everything else. They hold all of our debt. So when the Bank of Canada is meeting on October 25th, we most likely will not be getting a rate hike, which is good news. But unfortunately, there has already been a rate hike. So if you go to qualify for a mortgage today, tomorrow, or into next week and moving forward, you're probably going to get about 0.2, 0.25 higher than you would have got a couple of weeks ago. So the rates are going up. There's a lot of uncertainty in the market. A lot of the buyers are afraid, thinking that the rates have gone up so much, but the prices haven't come down that much. So we still need to see that balance out. One of the things we are seeing, and I mentioned in my previous video too, is today we have 10,816 freehold homes in the market. When I say freehold, I mean freehold townhomes, semi-detaches, and detached homes in all of GTA, 10,816. That number is going up. We have 8,240 condominiums on the market. That includes condominium apartments and condominium townhomes in all of GTA, and that number is going up too. Now, normally I explained in my old video, inventory goes up on Wednesday, Thursday, Friday, sells over the weekend, and it drops down on Monday and Tuesday. That is not happening. Even today, the inventory numbers are higher than they were on Friday. So we're getting a lot of more homes coming onto the market. We're seeing the rates go higher, and we're kind of seeing buyers being a little bit nervous on the sidelines. So what we do expect is when this seeps into the marketplace is that, yes, prices will trend lower. Now, is it going to be a steep decline, a steep drop-off? We haven't seen that yet, but we are seeing that prices are starting to soften. Multiple offers on homes are starting to lessen. But the rental market is still heating up because people don't have anywhere to live. They can't afford a home. They can't afford to buy a home, so they still are moving into a rental apartment or a rental home. So that sector of the market is still really, really hot. Also, keep in mind on October 25th, when the Bank of Canada does meet, even though they don't raise interest rates, if we get another sign of high inflation, that grocery prices, fuel costs are rising, there is a chance, even though we don't have a rate hike in October, that in December we could have a rate hike. They have their final meeting of the year. The U.S. Feds also did mention that even though they're not raising rates, there is room for them to raise more. Now, we don't think they're going to raise much more, but if you look at the numbers coming in, there could be a quarter point in December, and going into January, February, March next year, there could be another quarter point. We need to see the government kind of reach their peak, let us know that, okay, we are done with rate hikes. They haven't announced that yet. And once they do that, once we get our kind of final rate hike announcement and the ultimate pain has arrived, usually 10 months from that time, 10 months to 1 year, is when we'll see the first rate cut. So they're not done raising yet. People did expect them to drop rates going into 2024. We don't know if that'll happen until the Canadian government and the Feds in the U.S. announce that the rate hikes have been kind of reached their peak. They feel comfortable. They see the market softening. The unemployment is going up and home prices are coming down, and we're going to leave the rates here for a certain period of time. When they make that announcement, anywhere from 10 months to 1 year, normally, not always, normally we'll see the first rate cut. And again, guys, this is Real Estate with Raza. If you have any questions for your personal situation, reach out at any time. We had a few clients reach out to us over the weekend, and again, we're helping people restructure, and we're helping people to kind of downsize and get into a better situation. You can reach me anytime at 416-995-7317, and we'll keep you guys posted. Until then, you have yourself a wonderful day. Real Estate Raza. Until next time. Bye-bye.